Trading boom and crash can be the hardest thing to do when you're trading indices because it's so like two completely different markets that have been squashed together to make what a one market, right? That's mostly because either you're trading ticks or you're trading spikes, right? So it can be quite frustrating, especially if you haven't got the best idea on how to trade this strategy, right? It's been quite hard for me to explain to somebody how to trade boom and crash. It took a while, right? But ever since I teach them these concepts at first and then go deeper, right, it's very easier for them to make money using this strategy on the boom and crash market, right? So the first tip that I'm going to be sharing with you is after every consolidation, right? So when I say consolidation, I mean that small, even this, I consider this a small consolidation. This over here is a consolidation. That's a consolidation over here. So you have to know that after every consolidation, there's a big move that's coming. So now you have to get to know where the move is going. If it's going to be entering for your for your buys or your sales, right? So this boom 500, right? So the spike going up, you crash this spike going down, but this boom 500 that I'm going to be showing you today. So knowing that, now you have to anticipate for where the market is going to go, right? So that's number two, right? So I'm just going to be sharing with you some basic price action concepts. Everybody knows those concepts, but you haven't put them into play yet because most of the times people anticipate that you have to find a hard strategy. You have to analyze very hard in order to make money, right? But that's generally that's just right. There's no such thing as that, right? So what you have to do when you're trading boom and crash is first of all, you don't enter before a consolidation. You don't enter in the middle of nowhere, right? So you have to find a perfect entry spot. How do you do that? So first of all, when you are, let's say you want to trade this uptrend over here, right? So this, you can use this on any either trading spikes or ticks, right? You can use it. So let's say you want to enter for this buy over here, right? Just don't enter in the middle of nowhere like over here, right? When you see this huge spike over here, this big engulfing candle over here, you just don't enter here. Why? Because most of the time after a large spike, there's a small pullback, right? So the drawdown will be quite too much for you to handle, right? And most of the time you exit, and after you exit, it starts spiking again. So frustrating, right? So for the perfect entry spot, right? So on the entry spots, that's what I was saying. You have to see a small consolidation, right? It can be 2 or 3 candles, right? Just like this over here. This is I consider this a consolidation, right? So you have to enter on a consolidation, right? So first of all, you have to wait for a pullback. So when you want to enter for this buy setup over here, right? So first of all, right, you've got this trend line that has been broken over here, right? So after that has been broken, right, you mark all your key levels of interest, right? So this could have been a perfect entry spot, right? But you don't enter yet. Why? Because the market was still in a downtrend, right? So this is for a downtrend, right? Because as you can see over here, there's quite there's a small trend line over here, right? So you wouldn't enter for a buy over here. Most probably you might have even entered for a sell over here because the market was still in a downtrend, right? So right here you've got no entry, right? But after this breaking market structure, right? Breaking market structure over there, right? Because we are breaking this structure, right? We broke this trend line first, right? Then you broke this high and this high, right? Or even went further to break that ultimate high over there, right? So after the breaking market structure, that's when you anticipate you'll start looking for your buy setups, right? So how do you look for your buy setups, right? I'm going to show you another bonus tip, right, on how you can enter very easily, very smart. Even a 2-year-old can do this later in the video, right? So make sure you watch to the end so that you don't miss that tip, right? It's just a simple indicator, right, that I'm going to show you. So how do you know when to enter, right? So after right here, right, wait for a pullback, right, and then you enter when there's a small consolidation, right? Most of the times when the trend is about to change on boom and crash, there's a small consolidation, right? It can be just a small delay or just a few candles that start hovering around, right? So right over here, if you drop down to the lower time frame, to the 1 minute time frame over here, this could have been a small candle, right? But you don't enter here because there's no reference point to the left, right? So whenever you're trading, always look to the left to what has already happened, right? So there's no reference point over here because there's no previous support, there's no previous resistance. Maybe if it had came back and tested over here, you could have entered, right? But here there is no such thing, right? So you don't enter over here, right? When it pulls back again, let me use this use this line. So when it spikes again, right, it breaks this high, right? So when the market comes back to test this high over here, this broken high over here, right? So this broken resistance now becomes a what? A support, right? So when the market comes back to test this support over here, right, you start looking for what? For your buy setups, right? So when do you get an entry over here, right? As you can see, the market was going down, 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 right? A small spike goes down a little bit further, right? Then there was a small spike over here. You drop down to the lower time frame. So if you are using the 50-minute time frame, we drop down to the 5-minute time frame. And if you are using the 5-minute time frame, we drop down to the what? To the 1-minute time frame, right? So if you drop down to the 1-minute time frame, I'm sure you see a what? A small W over here, right? And when you see that W, you take what? You take that trade, right? That's the small consolidation that I'm talking about, right? And over here again, right? As you can see over here, the market spiked a little bit, didn't go further, right? This can also be a consolidation because the market is refusing to go either up or down, right? So this could have been what? An entry point, right? But over here, right over here, this small W again, right? We've got a small spike, goes back a little bit, and then starts spiking again, right? So you take your entry over here, right? So right over here, you might ignore this trade because what? There was a what? There was a huge spike, right? But if you're willing to take the risk, you can just enter above over here with this spike over here because this small W, right, makes a large stop loss, right? Because your stop loss you place it below the what? The previous high. So you'll be placing your stop loss over here, right? So if you enter over here, that's the large stop loss, right? So but over here, when it pulls back again, if you place your stop loss, if you enter here, you place your stop loss here, it's quite a what? A smaller stop loss, right? So you either enter over there, right? Over here again, you take what? You take the trade when the market pulls back to this what? Previous support over here again, right? So you've got what? Your entries over there, right? Then we move back, we mark again this what? This resistance. When it gets broken over here, right? The market pulls back to the first time. There's a small consolidation. You can enter over here, right? And pulls back the second time, right? So it's continually forming what? A series of W's, right? So the very simplest thing that you can do on boom and crash is just marking what? The broken support or the broken resistance and use that in that level for your what? For your entries, right? So right over here, and push back again, enter again, right? That's just what you do. That is very simple, guys. Just shifting the same what? Same resistance over here. It makes this resistance over here, push back, gets broken. When it pulls back again, you take your entry, right? Just marking the previous resistance that was broken, right? So this resistance wasn't tested, right? Because the market didn't reach over here. So you ignore it or just leave it in case the market comes back to that point for in the future, right? Again over here, when it breaks up, retest, and you enter that trade, right? So let me look for a what? For a downward setup, right? For a sell setup, right? So over here, let me use this trend line, right? We mark this up, right? So you have to understand that the simplest things can make you the most money in the market. You don't have to complicate things too much, right? Because if you complicate things too much, that's when you what? You take bad trades, you leave the best trades and take what? The trades that will frustrate you, that will make you lose money, make you cry, right? So over here, it didn't quite reach over the support that was broken, right? So you might have lost this trade, right? But you drop down out your resistance again, right? When it pulls back here, you enter, your stop loss goes above the previous high. So your stop loss is here, you enter yourself, and as you can see, you went into profit, right? It's very simple, guys. Right over here again, when it pulls back over here, so you enter over here because the spike reached here, or you enter over here again, right? The stop loss goes above the previous high over here. That's how easy this is. This is very simple, guys. You will be able to make a lot of money, right? Right over here, this resistance, sorry, the support gets broken, it becomes a resistance. When it pulls back, you enter again. That's it's very simple, guys, right? But try it on first on demo, right? Take a few trades first on demo, and then come back and leave a comment on what you found out, right? So the indicator that I promised you, right? We are going to be inserting what? The moving average, right? So go trend, moving average, right? I'm going to set the moving average of period 50. Let me show you the magic it is got, right? I'm going to use black, right? Then I click what? Then I click that, right? So those setups that I was showing you, right? So over here, right? But I don't like using the moving average only because, as you can see, most of the times it doesn't pull back exactly to that point. It misses a lot of times. But if you're used to using what? This moving average, you know that most of the time when it starts consolidating just above or slightly below the moving average, like over here, this is slightly below and this is slightly above, right? You can take your entry, right? But that's the best uh, replacement that I can use if in case you don't want to what, mark up your the resistances, right? So right over here, we've got an entry over here, an entry over here, an entry over here, an entry over here, an entry over here again, right? That's it's very simple, guys. Pull back. So first of all, you have to wait for the candlesticks to break what? The moving average, right? So it broke the moving average to the downside over here, pulls back to the 50 moving average, you take your entry, pull back to the 50 moving average, you take your entry. You just take your entry when it pulls back to the 50 moving average, right? Right over here, all these entries, you could have hit them, right? It's very simple, right? So if you like the video, like, subscribe, and share the content, right? So that it can help other people also, right?